It's the more obvious things that are profoundly important to customers that I think we've gone out and said, well, that's still a challenge in this industry. Let's solve that. I don't think many merchants, unless they're working with a good enough payment provider, are noticing that in the detail and levels that they should be in real time. If we can show customers in real time where these issues are, and we are able to reroute transactions to a more suitable acquirer, in simple terms, we're able to then increase the acceptance rate.
Welcome to the ChargeForward podcast. My name is Jared Wright. I'm the head of marketing for Chargebacks 911. Today, I'm real excited to be speaking to Samuel Barrett. Sam is the founder and CEO of Paytonly. He's an early stage investor, a fintech leader, and he's passionate about simplifying B2B payments and building genuine connections. I'm real excited to have you. Thank you for joining us today, Sam.
Thanks, Jared. Thanks for having me. Pleasure to be here.
Yeah. And today's conversation, we're going to talk a little bit about Sam's journey, how he was able to turn false declines into real revenue for himself and for his client. Just to kind of kick us off, without spending too much time, can you give our audience the Cliff's Notes of your career that led you to founding Paytonly?
Yeah, sure. So I've been in payments fintech for a good 15 years. I started my career in London, working across a number of different payment businesses. Some people would recognize some of the names like PaySafe and World First that got bought by Ant Financial. But I spent my kind of younger years cutting my teeth at smaller payment businesses. One was Click and Buy, which was a well-known German e-wallet working in the wonderful world of high risk. And I spent my last 6-7 years before I started Paytently in the senior leadership team, building out the gaming division at open banking leader Trustly, which is actually where I met one of my co-founders, Nick Tucker, who's now with me at Paytently.
We're going to talk a little bit about the Paytonly journey today, because we had talked a little bit offline. But just for our audience sake, when did you found Paytonly?
So Paytently started at the end of 2022, beginning of 2023, just as a simple idea to get started with our own payments business.
I'm always interested in that process, and in your thinking, when you made that decision, what was the biggest thing about taking that leap that scared you? What was your biggest concern?
Yeah, so I mean, like I was saying, I've been doing this a long time. I've always been in kind of commercial leadership roles, working for large payment companies, and I've learned a great deal about the payments industry as a whole, working with FX, open banking, acquiring within the alternative payment space as well. So there's many strings to the bow. But I'd never really got to such a senior level where I was, running a business myself. And I guess as an ambitious commercial leader, which I am, I think that was always an itch for me that I wanted to scratch. When I had the opportunity to leave my last role, there was a huge fear of failure of me actually doing this, and I guess that's one of the the biggest things that you kind of go through as a process when you're making that decision, that leap of faith, as you say. The cortisol levels rise while you're making that decision about leaving the corporate world to go and give this a shot. But luckily for us, I mean, me and my co-founders were fortunate enough to have some financial freedom from the last few years of our careers. And I think it was that financial freedom that gave us the opportunity to go in and buy us a few months of trying this out, becoming an entrepreneur and setting up our own business. And we also just knew at the back of our heads, if this fails, we'll just go and get a job, right? Because we've worked for so many different businesses, we understood that we can just go and get a career tomorrow if we had to. And I think the risk of not doing it and looking at other people that had inspired us to do it and not being in their position and still working for somebody else, building other people's businesses for them, which is obviously what we've always done, I think that would have been far more of an issue for us. So yeah, we're very happy that we took the leap of faith. But like I said, it definitely came with its fair share of stress and challenge.
Can you talk a little bit about the specific problem that Paytonly solves? What does Paytonly do, basically?
So Payton is a payments orchestration platform. We started off building a very intuitive payment gateway, if you like. We're going to use simple language. Payments orchestration has been typically used a little bit recently as a buzzword, or a buzz term. But we've effectively built a payment gateway that is analyzing data in real time to be able to drive high acceptance rates and drive traffic or volume, if you like, from merchants, cashiers to the most suitable acquiring bank when we're talking about card processing. Our proposition has evolved significantly over the 2 years, where we started off processing card payments, and now we are servicing many different markets with local payment methods. We've brought open banking. We just did a recent strategic partnership with MasterCard to be one of their chosen providers for their open banking proposition. And all of these alternative means of payment are allowing us to help businesses, our customers, kind of scale globally and allow them to offer great payment methods to their end users, their customers.
Okay, so payment orchestration. You said it's a buzzword. So what does that mean to you? What would be the base value prop in that from a merchant standpoint? Why would they work with a company like you instead of?
Yeah, so in simple terms, payments orchestration is like a GPS for payments. You're trying to route the payment to the destination as quickly and as safely as possible. And we have a lot of businesses today that don't really focus on the payment data in real time on a granular level. And they are not able to successfully increase acceptance rates for their customers, which payments orchestration, as a term that focuses on all of the sophistication that happens within the routing engine, and effectively deliver successful transactions for the merchant. If transactions are declining because the acquirer hasn't accepted it, clearly that is a loss revenue or a lost sale for the merchant. And it is our job, secretly and quietly in the background, as a tech provider within this space, to be doing all of that kind of heavy lifting so that the merchant doesn't need to worry about working with multiple different providers, having multiple different relationships. They can have one unified API that brings all of these acquiring banks and payment methods into one place, and then obviously access all of the data within one backend, which is what Paytonly's proposition is.
Okay, so you help merchants mitigate the risk of false declines.
Yeah, that is one key area, obviously, of Paytently, of course.
So let's just drill down in that direction. For you, what's considered a false decline? And how much of a problem is it for merchants?
Yeah, so false decline is when a customer tries to make a payment. They've got enough money in the bank, they've got a valid card, and that payment fails. The system says no, computer says no, if you like, and that obviously could be rejected because there could be potential fraud. And there's various other factors, and the problem with false declines is that I don't think many merchants, unless they're working with a good enough payment provider, are noticing that in the detail and levels that they should be in real time. Because if mitigated, obviously the success would be far greater. And as I said before, the sale would go through, the customer would be happy, and the merchant would be able to collect the revenue of that purchase.
So can you give me an example? Because I'm obviously not every transaction can be accepted, right? There's a whole bunch of reasons why a transaction should be identified as invalid or not accepted. So can you give me some examples that you've seen, that you've dealt with, where the transaction was valid, it should go through, but it didn't?
Yeah. So we have lots of tools that we've built within our business that is monitoring transactions in real time. We also have humans that are working on monitoring those tools. But clearly, one of the kind of biggest red flags or signs that this is happening, whilst we're monitoring transactions for customers in real time, is seeing approval rates dropping and having an increase in declines over a very short period of time. And that is often a sign that we have, an issue within the system, and that we obviously need to get in there and fix it. If we can show customers in real time where these issues are, and we are able to reroute transactions to a more suitable acquirer that are more suitable for the payments that we are bringing through, in simple terms, we're able to then increase the acceptance rate. And that obviously gives us a much more a stronger proposition for the customer, because they want to concentrate on accepted payments rather than rejected payments. The problem with false declines is that, as I've said before, it isn't necessarily just down to the customer having something incorrectly inputted, right? The card could be completely valid. There could be physical funds on account. And it is literally down to the acquirer not accepting that payment for a number of decline reasons, right? And obviously, the biggest issue for any customer, some of the larger merchants, and this is where payments orchestration gets very interesting, if they're working with 3 or 4 different acquirers of large scale, let's say it's Adyen, WorldPay, Checkout, and all of that data is coming in different shapes and forms, because those businesses are different. They might be giving the same message, but the way that they're giving that information is different. Paytently has done quite a good job in going out and unifying payment data. So even though we get error code ABC here and error code CDE here, it could be the same error code, but what we've done is we've unified it from different acquirers, and we're able to then give that information in a very simple and professional way to the customer, so that they can actually mitigate that problem from reoccurring. I think we find a lot of people, or a lot of our customers, wasting time working with different acquirers across the board, and not able to effectively or operationally efficiently work quick enough to mitigate these problems. And don't forget, these transactions are coming through in real time. So if there isn't a way in which it can be dealt with quickly, the loss of revenue can be quite significant. And that's why Paytently's payments orchestration platform is being used by so many customers today, because we're able to unify all of that payment data from different banks and bring it into one language, if you like, a master language that they can understand and utilize for driving acceptance.
Okay, so I'm a merchant, and I transact cross border, and so I know that in certain regions, certain acquirers are going to be less likely to accept the card, but I have a preference. So I would rather all my transactions go through the single acquirer, but I have region specific acquirers so you help me deal with that and manage that, to make sure that when somebody makes it to my shopping cart and they want to check out, that order is processed, and you do it kind of in a visible way. Like, how much time does that add to the checkout process?
Milliseconds. You wouldn't even notice it, Jack. Yeah, so for let's just talk about the customer journey. If an end user enters a merchant site, the first thing that we're doing is we are localizing the cashier. We're only really showing them the payment methods that either they've used previously, because we've got their details on file, we know it's a returning customer, and we're showing their most preferred method. Secondly, if we've got a certain specific country, we localize the cashier to show only the most preferred local payment methods in that region, knowing that the customer will most likely use those methods, because they've it's obviously from our kind of historical understanding of that market. We know exactly what to showcase, and that's on the kind of alternative local payment method space. When we come to acquiring, we're not a consumer-facing brand, right? Paytently is quietly doing the work in the background. The customer is using Visa and MasterCard, let's say, amongst many other schemes, but let's say it's Visa and MasterCard, a card payment, and they have no understanding which acquiring bank is connected behind. They are just making a purchase on the website using their card. All of that science that we just discussed, that sophistication that's happening in the background, where we are routing that transaction or that API payment data to the most suitable acquirer. If we get a decline, we are routing it immediately to the next one, or cascading is the word, right? Fortunately for our system, because we are using machine learning within our routing engine, we've intuitively over time being able to build probability acceptance models, which give us the highest chance of acceptance. So the real opportunity for payments orchestration is not to have to cascade, because that is, you failed and you're sending it somewhere else. The real opportunity is to have it accepted from the moment you send it. And that's based on the data that you've got historically, not just from that user, but from similar users who have made similar sized payments from similar countries, from similar banks, on similar websites that come from similar industries, right? Because there's different industries. We've got travel, financial services, we've got gaming, we've got digital goods. And all of these have different risk levels amongst acquirers in the schemes. All of that risk can cause a decline or an acceptance, as well as the value of the transaction, the time of day, the level of data that we have to go into to be able to make that decision to get the highest probability of acceptance is all done within milliseconds within the platform. And that's payments orchestration.
So if I'm a merchant and, I've seen an increase in declines, I think I have a problem. I speak to somebody at Paytonly, I get real excited about the platform. Um, how easy is it for me to implement it? Do you guys have that pretty streamlined, or is it going to take, some?
Yeah, so Paytonly has a very I would say straightforward API. Our engineers also have years of experience in building payment APIs, as well as doing great architectural design when it comes to payment platforms. I've seen engineers implement our API within hours, and if someone could implement it within days, that would also be very good. But typically, it's about a week's work for any standard engineer who's doing a few hours a day, because not everybody is doing a straight 24 hours code integration, which obviously that's what it is. It's been built by engineers for engineers, and I'm very pleased to say that even from a kind of engineering experience, if you like, the documentation, very straightforward, and very easy to understand. So easy to implement from a kind of head of payments usability perspective. Just back to your point, they're seeing all of these declines. What happens? Well, actually, it's the other way around. First of all, it's our job in real time to make sure that is dealt with at the technical level. If our platform is unable to devise from the information that we have on file or from the payment data what the issue is, we've got great experts within the business. Let's call them customer success managers for argument's sake, who then get on a call and call our client, our merchant directly, bring that information to them, most likely before the merchant's seen it, because we have a 24/7 customer support, and we are then able to give our recommendations on why we think it's happening, or request further information that we're not getting, that we assume it could be, to see if we can make further calibrations within the platform to optimize acceptance.
Okay. Is Paytently something that most merchants would benefit from, or do you kind of work with a specific merchant profile? And how would you describe the sort of perfect merchant for, if I'm a merchant out there, like, try to describe me so I know that this solution could potentially be a good fit for me.
So if you're processing payments globally, we're definitely a great fit. But we are certainly focusing in our first 2 years on Europe, rather than going into kind of more further afield markets. We don't want to be a jack of all trades, master of none. So we've become very stable within the European space by working with local acquiring banks. From an industry and sector perspective, we have a balanced book across low risk and high risk. But as I said at the start of the call, me and my co-founders actually all come from the kind of more higher risk space. We've all worked for large unicorn financial institutions that process payments within regulated betting and gaming, travel, forex and trading for financial services, as well as the kind of more digital goods space, recurring payments, which again equally can come with its level of risk. So we've been lucky enough to build our business with preferred customers from our past. And a lot of those customers have come with kind of more complex kind of payment processing industries like betting and gaming, travel, etc. So I'd say that is where our forte is. That's where we're most comfortable. We're not a Stripe. We're not going after SMEs. And we're not going after that kind of mass global proposition in that sense. I think we're more specialist, looking at the kind of more tier 2 to tier 1 higher risk regulated businesses.
Okay. I want to broaden out a little bit here. In your opinion, what's harder, building a technology or getting your first customer to try it?
Definitely the tech. Me, Nick, and Laurent, we're three. The co-founders are commercial leaders. We're not one of us in the founding team came from a tech background. So when we started the business, we obviously had to find experts within tech and engineering to come in and follow our vision to build out the tech. Like I said, we've got great customers that have followed us over the year. We've got an extensive network of clients and merchants that have worked with us for over 15, 20 years. And getting those customers and come and trust us with their payment processing was a lot easier than us going out and building a really good proposition that they would have been impressed with. We made a lot of mistakes in the first year, and we've been fortunate enough to bounce back from those mistakes and actually now have a really solid proposition, a really great product. A lot of our customers have commended us on the quality of the product, its usability, its features. And again, that doesn't come down to Laurent, Nick, and I being great co-founders. It comes down to the fantastic team that have followed us into Paytently from other big businesses and shared their years of expertise to help us fast track our tech platform that we've built from scratch, believe it or not, to the successful position that it's in today.
Well, at the beginning of the call, right before we started recording, you were telling me that Paytonly's just evolved again. So you want to talk a little bit about that experience?
Yeah, so like I said, we've only been going for 2 years, and that's a short space of time for what we've achieved. We've built a solid proposition that's serving over 70, 80 individual merchants today. We've got 35 people in the company. We've got offices across London, Belgium, and Malta, which is where I'm based and HQ'd. And we've always been purely a technical payments orchestration platform. So facilitating data analytics in real time to increase success rates of merchants between bank and customer. We've now just pivoted and become a fully licensed regulated financial institution under the Malta Financial Service Authority, the MFSA. And this gives us a huge opportunity to start launching new commercial products within our proposition and transition away from being a sole tech platform within payments and becoming a full stack PSP, and potentially maybe even one day to be an acquirer as well. So lots going on in the business. Very busy times. We certainly are going to be having a very interesting and busy 2026.
So was this always the plan? Did you have this sketched out, in these stages when you started, or have you written beyond the pages at this point? I don't know if that's a real expression.
No, I understand you said. So look, full disclosure, we've always only ever been as good as the financial institution we're working with, right? So when it comes to onboarding merchants, you have to have those merchants underwritten by the acquirer or the payment channel that's underwriting the risk. settlement fees and those kind of commercials are always dealt with between merchant and bank, and the whole kind of operational efficiency is in the hands of the third party you're bringing your customer to. We found that not with everyone. We've got some fantastic partners, and we're very proud of and grateful to be working with them. But there has been some experiences with some partners, which we don't work with no longer, where they've kind of made it very difficult for us to deliver the proposition we've always lived by at Paytently. And we knew that if we got a license, that would put us a bit higher up in the ecosystem and allow us to be masters of our own destiny. We'd then be in control of the underwriting and onboarding. We'd be in control of settlement time and speed, which is very important for customers, as you can imagine. And we'd be able to set our own commercials, which sometimes were, believe it or not, too expensive for our customers. And with us now being in control of those, we're a little bit more. We're able to be more effective within the competitive landscape when it comes to commercials. So I think that the license was the only way really to take this business, because we were trying to be we were acting like a licensed institution without a license. So it was kind of an organic evolution rather than was that always the plan. And obviously we've only been doing this for 2 years. So things are happening quite quickly in terms of the vision and it evolving and us taking those further risks. And there's a lot more of those risks that are now planned out for the next 2 years with other licenses and other strategic plans, which are going to make Paytently even more of a stronger proposition for our customers. And we're very excited to be getting going on those and obviously executing on them.
Fintech has always seemed to me to be an exciting space. It's got a lot of startup energy in it. If somebody's looking at making the leap like you did, they think they have an idea for a good startup in the fintech space, what would be the biggest piece of advice that you would give to help them, encourage them or discourage them to make that leap?
Yeah, don't do it. No, it's starting with a real problem. We started Paytently because we saw a lot of underwhelmed businesses working within our space, unsatisfied with the level of expertise, the level of customer service that was being offered, the propositions and the different solutions that were being built. It was all just a bit naff, and we saw a solution there, right? We thought we could go in and kind of bridge that gap for people. So that was our kind of problem at the start of our journey and vision, and we're definitely we've definitely delivered on that. Payments is incredibly saturated, as I've said at the start of this, and for you to go out and make a significant difference, you really do have to be solving a challenge for somebody. And I think there are many ways still today to do that. And I would certainly encourage anybody that has the ambition to own their own company within payment to go out and do it. A couple of things from me that made it super easy for me, which shocked me at the start because I didn't believe they existed. One of them was I was surprised how easy it was to benefit from my network. You don't realize until you get going how many people out there are rooting for you and want to help you. Either people that are in your position that have just started their business, or people that are a few years down the line and are kind of more successful, and they look at you as the kind of younger self. But there's so much help and advice and mentorship, and people were just literally connecting me to their network and giving me kind of fast track opportunities. So don't think that when you start, everyone's going to turn their back on you. You'll be surprised how many people are going to help you within your network. Just put yourself out there. And secondly, don't care about failing, because the risk of you, the risk of what you could lose by not doing it is far greater than what you're going to gain over a little bit of embarrassment, if that's how you see it. It depends on your perspective. There is still and the last one is the payments industry and fintech space is so incestuous, if I can use that word. I found it very difficult to not work with competitors, meaning everybody in my space who's competing with me is trying to do something with me in some shape or form, or I'm trying to do something with them. We're all leveraging each other positively because we've all got something that the other competitor doesn't have, and we're able to share opportunities with one another. So that's the wonderful thing about payments and fintech. It's a very incestuous space, and there's a lot of room for people.
Well, I think those are all great pieces of advice, and I really appreciate you joining us today. Just to wrap things up, I'm not sure how old you are, Sam, but the Inside the Actor Studio, I'm a kind of a fan of that old school show, and James Lipton always ended it with some rapid fire questions. So I try to do kind of the same thing on this show. Are you okay with me throwing some rapid fire questions at you?
Yeah, I actually didn't prepare for these, just between me and you, but that's no great. I love you even more.
That's good. That's what I'm looking for. All right. So crypto or cash?
Crypto.
Okay. Sailboat or RV?
RV.
Okay. In 10 years, will AI have a net positive or net negative impact on society?
Net positive.
And just real quick before we go, I always want to give you an opportunity if I'm a merchant and I'm interested in speaking with somebody, what's the best way for me to get in touch with you or the person I should speak to?
So if people want to reach out to Paytently, they can go onto our website. We have all of our contact information on there, and we'd love to hear from you.
All right. Thank you so much for joining us.